Well, folks, it seems GameStop is at it again, proving that predicting the stock market is about as reliable as trusting a pigeon with your lunch. The video game retailer recently released its first quarter earnings report, and let's just say it wasn't exactly a symphony of celebratory kazoos. GameStop stock took a nosedive on Friday, June 7, 2024, after the video game retailer unexpectedly advanced its Q1 report and announced a significant new share offering. This early announcement wiped out GME stock's gains from Thursday's rally. Throughout the day, the New York Stock Exchange halted trading on GameStop, GME, multiple times. Meanwhile, meme trader Keith Gill, also known as Roaring Kitty, was late to his scheduled noon live stream on Friday. Keith Gill was about 25 minutes late to start his first YouTube live stream in over 3 years on Friday. "I'm alive," he exclaimed, addressing the chat. The background image of the stream displayed a GME chart, and Jill humorously dressed in a costume of bandages and a splint to highlight the day's losses. "I want to remind everyone that this is me, and I'm the one active on my accounts, of course," Gill said. He reiterated his support for GameStop and CEO Ryan Cohen's management strategy, maintaining much of his views from the previous meme rally. Gill also noted GameStop's improving cash position, which reported ending the quarter with $1.08 billion in cash and equivalents, down from $1.31 billion a year ago. Gill expressed a positive outlook on the company's transformation from its legacy retail business. "But nobody knows for sure, including me," Gill emphasized, reinforcing that his streams are not financial advice. He added that his investment thesis might not pan out and urged investors to recognize the substantial risk involved. "My aggressive style of investing is almost always not suitable for y'all," Gill said. In a market already bracing for potential recession, GameStop's sales slump sent investors scrambling for the exits, triggering a dramatic plunge in its stock price. The company's struggles to adapt to the ever-evolving gaming landscape, coupled with broader economic anxieties, have left many analysts scratching their heads and investors clutching their wallets. Now, you might be thinking, why should I care about a struggling video game store? And you know what? That's a fair question. But here's the thing. GameStop's story is no longer just about joysticks and cartridges. It's become a symbol of the unpredictable, often baffling world of meme stock mania. Now let's dive into the analysis, shall we? Adding fuel to the fire was the surprise reappearance of Keith Gill, the man known as Roaring Kitty. This patron saint of diamond hands resurfaced with a vengeance. Gill, communicating through cryptic tweets and cat videos, set the internet ablaze. As GameStop's stock nosedived, Gill doubled down on his investment. Whether a financial guru or reckless gambler, Gill's actions rile up the masses. His renewed involvement sent shockwaves through social media. The hashtag #RoaringKittyIsBack trended, as his followers rallied behind their leader. He's become a symbol of retail investors' power against institutional giants. GameStop's recent roller coaster ride feels eerily familiar, doesn't it? It's like we've stepped back in time to January 2021, when the term meme stock first entered our collective vocabulary. Remember those heady days of short squeezes, diamond hands, and the intoxicating allure of sticking it to the man? Yeah, those were wild times. But while the players and the stakes may seem similar, there are some crucial differences this time around. The post-pandemic euphoria that fueled the initial meme stock frenzy has largely dissipated, replaced by a more cautious, even apprehensive sentiment. Inflation is soaring, interest rates are rising, and recession fears are looming large. Moreover, the GameStop of today is not the same company it was a few years ago. The meme stock phenomenon is evolving, and GameStop, along with its band of merry meme makers, is riding the wave once again. Just when you thought GameStop's story couldn't get any wilder, the company decided to throw another log on the bonfire of bewilderment. In a move that surprised absolutely no one who's been paying attention to this saga, GameStop announced a new share offering. That's right, folks, they're selling more stock. Now, for those unfamiliar with the intricacies of financial maneuvering, a share offering is essentially a way for companies to raise capital. However, in the context of GameStop's already volatile situation, this share offering landed like a rogue firework in a clown car. The problem is, issuing new shares dilutes the value of existing shares. So, as you might imagine, this share offering didn't exactly go over well with the meme stock crowd. The GameStop saga, in all its absurdity and volatility, has shone a spotlight on the growing influence of retail investors. These aren't your buttoned-up Wall Street suits with Bloomberg terminals glued to their desks. These are everyday folks, armed with smartphones, Robinhood accounts, and an appetite for risk that would make even the most seasoned day trader sweat. Empowered by technology and emboldened by a sense of community, these amateur investors have demonstrated their ability to move markets, challenging the traditional power dynamics of Wall Street. They've formed online communities, sharing information, strategies, and, of course, memes, creating a formidable force to be reckoned with. The internet has democratized access to financial information, while platforms like Robinhood have made trading more accessible and affordable. The little guy has a seat at the table, and they're not afraid to use their collective voice. The GameStop saga has exposed a growing rift between Wall Street and Main Street. On one side, institutional investors, hedge funds, and market makers. On the other, retail investors driven by FOMO and social media hype. This clash has led to accusations of market manipulation and unfair practices. Retail investors point to short selling as evidence of Wall Street's different game. Wall Street warns of market volatility and the risks of meme stocks. The GameStop saga highlights the need for greater transparency and fairness. Social media, the digital town square where everyone has a megaphone and no one seems to know how to whisper. In the GameStop saga, social media has played a starring role, amplifying the hype, fueling the FOMO, and creating a breeding ground for herd mentality. Platforms like Reddit, Twitter, and YouTube have become virtual trading floors, where investors gather to share tips, swap memes, and egg each other on. The echo chamber effect is real, folks. When everyone around you is shouting, buy, 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 it's hard to resist the urge to join the party, even if you're not entirely sure what you're buying into. The problem is, social media is often more about emotion than reason. Don't believe everything you read. Do your own research, and remember that just because everyone else is jumping on the bandwagon doesn't mean you have to. The GameStop saga has thrown a spotlight on the often murky world of market regulation, raising questions about whether the current rules are equipped to handle the Wild West of meme stock mania. Regulators are now grappling with the challenge of balancing investor protection with the need to foster innovation and competition in the financial markets. One area of focus is short selling, a practice that has come under intense scrutiny during the GameStop saga. Short selling, as you may recall, involves borrowing shares of a stock and immediately selling them in the market, hoping to buy them back later at a lower price and pocket the difference. However, critics argue that short selling can be abused to manipulate markets, drive down stock prices, and harm companies. Regulators are now exploring ways to crack down on pump and dump schemes, where individuals or groups artificially inflate the price of a stock through false and misleading statements only to sell their shares at the inflated price, leaving other investors holding the bag. The GameStop saga, for all its chaos and absurdity, offers valuable lessons for investors of all stripes. It's a stark reminder that the market can be a fickle beast, prone to sudden shifts, unexpected turns, and the occasional bout of collective insanity. One of the most important takeaways from the GameStop saga is the importance of diversification. Don't put all your eggs in one basket, especially if that basket is a meme stock with a tendency to spontaneously combust. Spread your investments across different asset classes, industries, and geographies to mitigate your risk and weather market storms. Another crucial lesson is the importance of doing your own research. Don't blindly follow the herd, no matter how enticing the siren song of social media hype may seem. Take the time to understand the fundamentals of the companies you're investing in, their financials, their competitive landscape, and their long-term prospects. So, what does the future hold for GameStop? Will it manage to transform itself into a digital gaming powerhouse, or will it become a cautionary tale of meme stock mania? The jury is still out, but one thing's for sure. GameStop's journey is far from over. The company faces an uphill battle. It's operating in a rapidly evolving industry, facing stiff competition from online retailers, digital distribution platforms, and gaming giants. To survive and thrive, GameStop needs to continue to adapt, innovate, and find ways to differentiate itself in a crowded market. One potential path forward is to fully embrace its status as a cultural icon, leveraging its meme stock fame to connect with a new generation of gamers. Ultimately, GameStop's future will depend on its ability to adapt, innovate, and connect with customers in meaningful ways. Don't forget to subscribe to our channel Tech Pros for more insightful analysis on the latest tech and stock market trends. Hit the notification bell to stay updated with our newest content. Like, share, and comment to let us know your thoughts and questions.